Thanks everyone for joining us here tonight. This presentation is a combination presentation between myself and Ophir, the CEO of CML Viz. This is one of our favorite trading tools that we like to use to time our trades. So let's go ahead and get started. So, what are we going to be focusing on tonight? Number one, we're going to focus on the 5-step stock picking process. Number two, key industry groups I'm focused on. So, something interesting. And for those of you who are in the room on a regular basis, I'm sure that you hear me refer to Ophir, his picks, his tweets. A lot of this stuff, I mean, it's coming from the research that he's doing. So, I mean, when you look at the Phoenix lists, I mean, those are completed lists, right? But it comes from somewhere, and CML is one of those places. Here are 4 key ways that I use this tool. So, like I said, I mean, when you see us come into the trading room and doing our videos and everything like that, I mean, it takes us some substantial amount of time to do our research and bring all of that together for you. And this is one of our prime research tools. And the next piece of this is obviously how to use this information, because you can do research on all sorts of places, right? But then you have to narrow down which resources are the best, and then you have to learn how to use it. The piece about Ophir and his company that I love the most is that he has amazing tools for back testing. So we get questions all the time on if we back test, how you do that. The answer to that is that's what Ophir does. Additionally, he has quite a few new developments, so he is going to take you through those. But the prime focus that we're going to do is we're going to talk about how to put this together, how to trade it, and primarily with options, but you can also do this with stock as well. All right. So, how many of you know me? This is me, Danielle. You probably see me in your trading room all the time. Most of you are probably members. Just wanted to throw this slide in here real quick if anyone's coming to us from a different location. But of course, I'm the director of options at Simpler Trading, one of the main traders in our options room. And then you can see everything I do here. I'm an analyst, trader, commentator, and these are all the different locations you can find me, along with in John's 3rd edition of Mastering the Trade, where you can find my beginner's journey. So here's a little bit about Ophir, my webinar partner for the night. So Ophir is the CEO and co-founder of Capital Market Laboratories. He's a former options market maker, which is just incredibly smart. And this is where he gets all of his information. So I think one of the best parts about this is that while I have that teaching background, he comes from a completely different spot. And that's what enables him to do all of this amazing math. And that's just a skill that I really don't have. So in trading, you have to kind of learn how to combine these different skill sets. And that is how we work together. So the next piece of this is the introduction to CML, which of course is his company. So Capital Market Laboratories, this is a research firm. They sit next to Goldman Sachs, JP Morgan, Barclays, Morgan Stanley. And a lot of people pay a lot of pay a lot of money for this information, but this is the anti-institution right here. But really what the most important part is how we use this data, because it all comes back to how we actually use this and make money with it, and that's why it's important. So there's a lot of different facets of CML Viz, but the way that we use it, primarily the way that I use it, are number one, the stock picks. So Ophir does a lot of rigorous research and sends out a couple different emails per week on in-depth reports on various companies. Some are up and coming, some are more common names that we know of. He talks to CEOs on a regular basis to get that information directly from them and bring that to his members. He also has these really awesome scanners that he's going to go through for us. And he can describe how he does that back testing so that you can really time trades properly. The next piece of that is the new strategies that he's added to the backtester. So previously, Henry, John, and myself, we primarily used CML Viz for the run into earnings. Well, now he's added some buy the dips and a couple others in there that are great. Like I said, you can use it to test out various option strategies for profitability and just a heads up on great new trade ideas. So, today we're working on a little bit of collaboration. We do this every now and then, but I did want to let you know, and Ophir is going to talk about a little bit at the end, that we do also have follow-ups to this webinar. So all this is just one webinar. We are going to have a couple follow-ups as well. So for right now, let me go ahead and talk about how I use CML. So number one, how many of you are familiar with the Phoenix Folio? Yes, familiar with the Phoenix Folio, familiar with the Phoenix tool. We want to buy the dip. All right, so how many of you are not familiar with it? Not familiar with it. Okay, so I see lots of yeses, a couple no's. Okay, a couple no's. All right, so for those of you who know it, don't worry, we're going to go over it. We'll go over it good enough for those of you who aren't aware and for those of you who are aware. But essentially, what I'm going to talk about is the fact that my top two favorite strategies can both be back tested and backed up by Ophir's research. So the essential purpose of this is that the two go hand in hand and how that works. So my Phoenix Folio, what this is a basket of hand-picked stock lists. So I have a bunch of different lists, which I'll get to in a minute, but I have some cybersecurity lists, I have cloud computing lists, I have large caps, I have up and coming, new hot stocks, I have a millennials list. And what these are these are my hand-picked stock baskets with key names within those lists that whenever the market falls, I'm looking to buy them on the dip. Why do I want to do that? Because those are the strong names, technically and fundamentally. And for me, those lists are the starting point for everything that I do. Okay. And so we're going to talk about how that kind of combines with Ophir's work. But I mean, essentially, why do I call it the Phoenix? Well, I'm sure that a few of you are probably familiar with the legend of the Phoenix, right? So essentially, the Phoenix, what is the Phoenix? This is a bird that at the end of its life cycle, it builds itself a nest of cinnamon twigs and then it ignites, and both the nest and the bird burn fiercely. It's reduced to ashes from which a new young phoenix arises. So this is going to be, I mean, I think it's a perfect metaphor because in the stock market, what you want to do always is you want to be fearful when others are greedy and greedy when others are fearful. And the best way that you can do this is if you come into the stock market on down days and you pick some strong names to get in on the dip. But of course, the question is, all right, we have the concept, we know the concept, how do we do that? Well, like I said, and this will also get back to Ophir's overall back testing as well as his research process. But this is the essential process that I go through. So I start with number one, always going to start with a big picture outlook. I always want to look at the equities market, bonds, currencies, and try to determine, okay, where is the strength in the market? Is it in the NASDAQ? Is it in the S&P? Is it in the Dow? And then from there, I narrow down my picks. When the market's trading higher, I want to stick with strength. When it's trading lower, I want to stick with weakness. And so, within that, then I narrow down which list I want to focus on that essentially at the end will get me to a pick and then I can trade it. So, how does that couple with Ophir stuff? Well, you can backtest all of that, all right? Second part of this is really just focusing on the mines and which ones are important. Here are a couple of my favorite mines that I have been using recently. I always like the Grandma Loves It list. This is my favorite large cap list. I also love the cloud computing list. Ophir can talk about that one quite a bit. Millennials list, the debt bubble, which is my newest one, as well as cybersecurity. So here are a couple different examples from Ophir's emails that he sends out. Now, I try to pull these up in the trading room when the moment presents itself, but you also may not be aware that we're using this information for trades in our trading room. And so you can go back within his service. You can see, all right, we had a trigger here in service now. We had a trigger here in MDB. He was the one that turned me on to this one. Does anybody remember a couple different trades that I've had in MDB that have been really hot flyers? Well, it's where that came from. So initially it was him that showed me that amazing stock. The next piece of this is, of course, just timing it, being able to pick the best one at the right time. You have not seen the debt bubble list yet. Yep, that's correct. So I haven't been able to get the brand new list finished, but I will do that this week. So those will be sent out this week. All right. So now, let's talk about how these is a little bit different. So in the beginning, I've always done this process manually. I've looked for relative strength. I've compared the different tickers against each other to identify which one's triggering first, which one's the best, where the entry point is. But now the best part about the new CML tool is that I can also cross-check my work with the backtesting tool. And not only that, I can find new Phoenix stocks. All right. So really what this is doing is identifying relative strength on the dip. So here's some examples. Here is an example from CML Viz and Ophir's Buy the Dip technical trigger scan. So within CML Viz, and he's going to go through a bunch of examples, essentially what you can do is you can scan and you can figure out, okay, which tickers are the strongest on the dip? Where should I buy my deltas and where should I put my stop? And what percent return am I going to get if I follow this exactly according to the plan, right? And of course, it's a guide, right? So it's a mathematical guide, and he can get into that a little bit more. But this is a great way to go back and check your work. So for any of you who see me using the Phoenix list on a regular basis, do you recognize some of these names on this list? And these are the ones that are coming up on his scan. You've got Apple, Starbucks, Cisco, Intel, and Netflix. Well, it's because they're all right there as well. So now we can use this information to more precisely time our entries and exits along with the backtest specific option strategies. So here's one of my favorite parts about the service is you can also use this scan and you can go through and you can sort. My favorite one is based on the backtest return. And then you can take that and you can couple all of these results and throw them into your Phoenix Finder so you can get an ideal entry point. You can scan by strategy. You can scan by index. So particularly, for example, if the NASDAQ is strong, you focus on the NASDAQ. If the Dow is strong, you focus on the Dow. You can take your same Phoenix strategy and apply that and couple it with back-tested results. So that's just one of the many new topics he's going to discuss. But that's not the only one. So in the past, what I've always done is I've used the run into earnings, but now there's also bullish momentum, bearish momentum, and buy the dip. How many of you are familiar with our run into earnings strategy that we use in the options trading room? Me. You're a new CML customer. Okay, lots of yeses. Lots. Hey, Tim, nice of you to join us. All right, so hold on. Lots of yeses. Let me scroll back up for that question. I am a CML customer. I never know what time period to use in my backtest and why. Can you say more about the topic? I appreciate it because the results differ according to time frame used for the backtest. Yes, Ophir, would you like to respond to that question? He's going to be up in just about 5 minutes.
Sure. Can you hear me?
Yes, I can. Thanks for joining us.
Okay.
Everybody, welcome Ophir.
Thanks. I'm going to actually address that question with the timing of results when it comes to my time. And I'm going to actually show 24 trades, and I'm going to show how, even though I'm going to find 24 trades, I'm not looking at 24 possibilities. And a part of the process of finding the best ones is to look at different time periods and what to look for and what to look for when they differ. So I'll just put a pause on that question and let you finish until I get to my part.
All right, great. Sounds good. All right, I'll try to be a little bit louder. All right, so for those of you who are not familiar with our run into earnings strategy, I mean, essentially, earnings brings about 3 distinct opportunities. You can trade the run into earnings, you can trade the report, you can also trade the after earnings play. Now, out of these, I'll tell you right now, this one is definitely the most lucrative out of the 3 that I do. This one is fun and it's more of a flip flop type thing that I use a little bit more low risk. After earnings plays are excellent, but they're a lot more few and far between than the run into earnings. So the run into earnings is one of my key strategies. And this is the strategy that we've used for years going along with Ophir's work. So we're going to talk a little bit more about that. But essentially, the idea is that you have a cluster of earnings reports every quarter. And what happens in the stock market is typically bullish, strong stocks will run going up into earnings. Why? Because people are bullish these names, and what they do is they start buying the stock prior to the earnings report, which causes the price of the stock to trade higher. Now, because we trade options, we can also benefit by not only the rise in price, but we can also benefit based on the rise in volatility, because volatility also rises directly going into an earnings report. So, coupling those 2 factors together, along with the backtest results, we can time our entries and our exits for these critical runs into earnings that we like to trade. Amazon, one of our favorites. The next one is Microsoft, also one of our favorites. See right here, you got an earnings report, higher, earnings report, higher. But as you can see, like what Ophir was saying, is you have to know how to time it right and how to use the tool properly. So that is something that he is going to get into a little bit more. So what are we combining with this trade setup? The initial market observations, stock selection process, technical work, back testing, and you have to know which option strategies you want to use. So the most important part about this is learning about the combination and how you can use it effectively. So you want to be able to use key technical strategies with the backtesting to equal your trading success. Let's see, I do see quite a bit more questions. And it's just time for Ophir to come in and start walking through all of his trade examples and demos. So let's go ahead and flip this over to Ophir, give him a very warm welcome, and he is going to walk you through his part.
All right. Thanks for that, Danielle. That was really interesting 20 minutes. Thank you for that. First time I learned about Phoenix. I'm going to share my screen, but once I share my screen, I'm going to need a confirmation that you guys can see it. And I don't want to create the infinity screen where it's a screen inside a screen. So I'm going to have to put the chat tool down. So it'll have to be audio, but I'm going to share my screen right now. Hold on a second. Okay, great. So I have two goals for this webinar, and Danielle did a really good job in covering it. First, we're going to look at 4 trade triggers in depth. Okay, the trade machine has many more than 4, but I don't want to talk about many more than 4. I just want to talk about 4. And it's the 4 she talked about. It's buying the dip, it's bullish momentum, I call it bullish bursts of momentum, equally bearish bursts of momentum or reverse momentum, and then the pre-earnings run. Okay, that's the first thing. Second is we're going to see how to make use of Trade Machine so we can apply these triggers to stocks that you like to trade or scan for the best performers. So to be clear, the goal here is that once you log into Trade Machine, rather than thinking, what next? You will think, I know exactly what I need to do, and I'm going to find a trade within the first 5 seconds. So by the time this webinar is over, you'll have 4 new trade triggers. You'll be an expert at using Trade Machine. That is my promise to you. And we're going to set up 24 trades in real time right now. Okay. The overarching goal of Trade Machine is to create a portfolio of triggers. So you look at various types of trades, you investigate them, you do some testing, and they say, yeah, I want to do this trade when it's ready. You set an alert, and then you move on and find more trades. And the goal is you have a portfolio of alerts, and Trade Machine does the work for you. Right? So you're going to get text in the middle of the day or an email or both if you prefer, which I do, and we'll let you know when some of your triggers are firing. And so you do the research at the beginning, and then you get all the benefit of a machine doing the work for you to alert you. So let's stop talking about what we're going to do and just do it. We'll start with strategy number 1. It's buy the dip, or really buy the rip after the dip. Okay. We're going to watch a short video, really short, like 5 minutes, and then I'll come back and show you exactly how to become an expert in finding the trades for this trigger in Trade Machine. So it's not just a presentation of, oh, how wonderful is this? I'm going to come back in and I'm going to find 9 trades in real time with you tonight in probably less than 5 minutes using this trigger. Doesn't mean there's only 9, but I'm going to show you how quickly you can find both in the Dow and NASDAQ 100. I mean, we're talking minutes, if not seconds, okay? But something to remember, and this is really critical for option traders, right? For all or mostly option traders. Buying the dip only works with options if the stock is in a downtrend and then reverses, right? So that might sound trite, but as option traders, it can be overlooked. So we can be dead right on direction as option traders. But if we're wrong with timing, we're just going to lose 100%, right? And then we'll watch the stock 2 weeks later rip and say, well, we were right, it ripped, right? So I would say buying the dip is really called buying a loser. Buying the dip and then finding the signal when it's going to rise, that's what we're after. I can find stocks going down. Just go to any page that has a NASDAQ 100, all 100 constituents, sort them by change on the day. You can find the 50 stocks that are down. That doesn't help us. We want to find the stocks that are down that are going to go back up. Okay. And in fact, we just did it today on Gilead. Actually, yesterday and today, right? And our members made 50% overnight. Okay. So let's watch a short video clip, and then we'll do it in Trade Machine. We'll see exactly how to find the best performers. Literally, I will show you my process. I will find 9 trades that I will do, and we'll do it all in a matter of minutes. So for the tech team over there at Simpler Trading, could you please play the buy the dip vignette? This is just like a 5-minute video, guys, and then I'll come back. And I think I need to mute myself, so let me go do that too. Today we will discuss, define, and be explicit in our rigorous testing of the buy the dip technical trigger. Here we go. By the time this webinar is done, you will see the exact technical settings that have shown a buy the dip opportunity and how this signal compares to the baseline. We will see actual examples with charts and results. We will see the results in the scanner. But we make a note, buying the dip is only a good idea if the stock goes back up. Otherwise, it has a different name. It's called buying a losing stock. We're focused not so much on buying the dip, but more on when to buy the dip. For some quick definitions, for the 10-day and 21-day moving averages, we're using exponential moving averages. And for 50-day and 200-day, we use simple moving averages. For RSI, we use a 20-day period. The setup will look like this. Our research looked at the last 1 year, 2 years, 3 years, and 5 years of returns. We used the NASDAQ 100 as the study group, that is the constituents of the NASDAQ 100. And after tens of thousands of backtests, we landed on 3 technical settings for this buy the dip technical trigger. We wait until the day that the stock price crosses above the 200-day moving average from below. That means the stock has been in technical failure up until that point. We want to see the stock price is already above the 10-day exponential moving average, because that indicates to us that some short-term momentum has been confirmed. Remember, we're looking to buy the dip if the stock goes up, not to buy the dip. We want to make sure that the RSI is below 70. We simply want to check that the stock is not overbought. A few other settings, we use 30-day options to give the trade time to make its move, and we use a 50% stop and limit. We can go to the Pro Scanner, go by strategy. For these purposes, we'll just use the NASDAQ 100, though of course you can use this scan on any group of stocks you like. We'll go down under Never Trade Earnings to Buy the Dip, Technical. And now we're going to get all of the best performers from this trade. We can sort it by ticker, and we're going to see some of our favorite names. Apple and AMD, Activision, even Baidu. And we can go through this list and find all of the best performing stocks. If we go back to Apple, you can just click on the link and it will load in your trade machine. But while we're here, let's think about the types of companies that would perform well with this trigger. It would be companies that react heavily to macro news, companies that have exposure to China, companies that have exposure to large momentum swings. So let's add Starbucks, which has a huge exposure to China, Cisco, which has huge exposure to China, Intel, which has huge exposure to China, and Netflix, which has huge exposure to momentum. And now we look over the last 3 years and we see the results. These trades can come in bunches and then go away. But for each of these stocks, the win rates are at a minimum of 60% and the returns are absolutely staggering. And you can go further with this. If you click on a backtest tile, let's say Apple, you can see that the average return was 110%. And then we can pick out a trade. On February 12th, 2018, this triggered and it closed on February 15th. The stock went from $162 to $172, and the calls went from $390 to $970 in 3 days. That's 150%. Now, let's look at that in a stock chart. And here it is. This black line at the bottom is the 200-day moving average. This more volatile line is the 10-day moving average. We can see on February 12th, 2018, Apple stock had gone from below the 200-day moving average to above the 200-day moving average. And the stock price crept above the 10-day moving average as well. This was the trigger point, and this was the rally in just 4 days that showed 150% gain in the calls. You'll notice that Apple had been in a dip for quite some time. The question was not, is the stock going down? That's easy to find. The question to answer is, when historically has this downtrend turned into an uptrend? It seems easy enough when you look at a chart. But remember, in real time, you don't have a chart of the future. All you see is a stock collapsing. We can do a similar look with Roku. Again, the 200-day moving average is right here. The 10-day moving average is right here. The stock price was above the 10-day moving average already. But the day it crossed above the 200-day moving average was February 4th, 2019. And for the next 10 days, the stock ripped. And again, hindsight makes it easy. We can see the stock collapsing in the end of 2019. And you think, oh, well, this would have been the ideal time to buy the dip. But that's in hindsight. Remember, in real time, we saw the days coming. We never knew when the dip was going to end. You might have thought this was the end of the dip, and you would have seen another 40% collapse in the stock. The point is not to buy the dip. The point is to buy the dip when historically the dip is ending and the stock is returning to an upswing. We can go ahead and add Roku and even AMD into the backtester and see the results for those two stocks. If we click on the backtest tile for Roku, we will see this February 4th trigger and this February 15th exit, just as we saw on the stock chart, yielding a 53.6% return. AMD is another company that is hypersensitive to news out of China. So a buy the dip trigger hypothetically should be useful for the company. And of course, the final step, but equally as important as trade discovery, is adding alerts for these events. So we'll click on the Add Alerts button. This will take us to the Alerts tab. Right now we're looking at Roku and AMD, but let's go ahead and add those other tickers that we looked at to start this demonstration. Apple, Starbucks, Cisco, Intel, and Netflix. This is a technical alert, and you can see the technicals are already set up for us. You can click the button just to verify it, but just clicking the Add Alerts button is going to get the exact trigger you want. We'll go ahead and put our email address in there, and I like to get text alerts in the middle of the day, so I know that these trades could be triggering at the end of the day, so put in the phone number. The link to the backtest is included as the alert, but I like to leave myself a note too. The note here would be buy the dip. Then I click Add Alert, and we have 7 new alerts created. We've done all of the work, and now Trade Machine will alert us when it's time for us to take notice of that work. All right, now I'm gonna share my screen and we're just gonna do it. I'm gonna pick up 9 trades. So let me share my screen again. 1 second. Okay. Should be seeing a Trade Machine. Okay, guys, we're gonna do this together. This is exactly what you do. So you signed up for Trade Machine. You're like, yeah, man, that buy the dip thing, that looked pretty good. Now what? You're staring at this screen. It's a big screen. There's a lot of buttons. Here's how we do it. Go to the scanner. Go by strategy. I'm going to start with the Dow, but I'll get to the NASDAQ as well. So I'll go to the Dow 30. I want to find some buy the dip technical trades that I want to do. We'll do others soon, but that's what we're focused on. No problem. Slight technical difficulty, sorry. Okay, we got it. So here are the results. So I'm just going to sort it by the number of wins. Okay, this is the Dow, right? So we have ExxonMobil, Intel, Walmart, Cisco, and Nike. Okay, there's no way I'm going to remember those 5 tickers, even though those are the ones I'm going to want to look at. So I'm just going to click on the first one, ExxonMobil. Okay. Keep in mind, it leaves my scanner open. Okay, so there's ExxonMobil. That's awesome, but I wanted to look at more than that. I wanted to look at Intel, Walmart, Cisco, and Nike. So now I'm just going to go in here and add them one at a time. Intel. By the way, I'm typing over my microphone, so it's going to sound a little bit loud as I type. I apologize. Okay. Walmart, Cisco, and Nike. Okay, so you think, okay, so are these good trades for alerts? We're not done. We haven't decided that yet. Over the last 5 years, they look good. But in order for me to want to trade something, I also, I don't just want to see it work over the long run. I want to make sure it's working in the near term as well. So I'm going to look at the last year, just click this button, and all of a sudden Intel doesn't work. Well, you know what? Then I don't want to trade Intel. I have as many trades as I want. So I'm going to take Intel out and rerun it. Now I look at these and I say, yeah, for the Dow 30, ExxonMobil, Walmart, Cisco, Nike, yeah, I want to trade the dip. I want to buy the dip. So I'm going to click Add Alert. It's going to load them right here. This is a technical type of trade, and it's already in there for us, but if you want to, you can just click the button to see it. Those are the same settings, okay? Have to enter your email address, so I'm just going to type it in. Sorry if it sounds a little bit loud over the microphone. I apologize. Okay, you're automatically going to get a link to the backtest, but I like to give myself a note. So I'm going to say buy the dip. This makes it easier to sort. Okay, and then I'm going to add it. I have just now, in virtually 60 seconds, created 4 trades. These are 4 things I want to do when they come up, but we're not done. Okay, all of my tabs are still open, right? So this is the scan tab, this is the backtest tab, this is the alerts tab. I'm going to go now and do this for the NASDAQ 100. I mean, I love trading the tech stocks, right? So same process, sort by wins. All right, we've got, let's see here. Starbucks, WTW, PayX, Intel, Gilead. Okay, sure. Workday, Cisco, we got Google, we got AMD. I'm not going to remember all of those, no way. So I'm just going to click on a ticker. Let's take a look at Starbucks, WLTW, PayX, Gilead, which just triggered yesterday, which just returned 50%, and then Workday. And then let's just see it. And we're going to get a warning message for one of these. Just let it go through. So it tells us the strategy for WTW has low liquidity and unreliable prices. Well, that's another reason not to do a trade. If the option market is too wide, I'm not going to do that trade. I don't care what the back test tells me. So I'm taking WTW out. That one gets nixed. All right. And is there something I want to add in its place? Yeah. AMD, we talked about it a little earlier. Okay. Now I'll take a look at these trades over the last 5 years. Look good. Let's make sure the last year is good. All looking good. Great. Now I'm going to add these as well. The technicals are already set. It's automatic. Again, I'm just going to add my email address. If when you sign up, your email address will automatically populate. I'm not showing my email address. Then your phone number. Again, I like to give myself a little note, even though I get the link. So buy the dip, and I'll add the alerts. Okay. We have now just added 9 trades. Took us, I don't know, 5 minutes. We've added 9 trades, and who knows when these technical conditions are gonna get met? Who knows which stocks are in technical failure? I didn't know Gilead was gonna trigger. I didn't know Apple was gonna trigger. I should add Apple as well, actually. Apple triggered when we first released this this indicator. Gilead triggered yesterday. They're gonna come. Nike's close to it. But why watch the market every single second? Why not have a machine watching it for you that is simply reminding you of the trades that you've already decided you probably want to do, right? And inside your alerts, this link is actually a link to the backtest. So if you don't remember exactly what was going on, you say, well, you all of a sudden get an alert in AMD. By the way, there was an alert in AMD for something else today. It's the last one I'm going to show you. It's the bullish bursts. But you say, whoa, what was that backtest again? You just tap on it and it's going to open the link. And here it is. And in the backtest, or just so you kind of familiarize with it, what are you doing? Oh, you're getting long a call. You're avoiding earnings with a very specific technical open. You don't have to memorize it. It's already there for you in the scan. This was the technical requirement. You have a stop and a limit, and we're using 30-day options. Okay. So you can see how quickly we added 9 trades. That fast. I came into Trade Machine, I added 9 trades. There's more, but I now have 9 buy the dips that I'm ready to rock and roll on. 2 of them have triggered in the last 7 days. And then I just keep doing this until I don't find good back tests anymore, right? So I have over 20 buy the dip triggers in my alerts already. And I don't even care where the stocks are right now. I really don't. I don't care if they're well below the 200-day moving average or they're over. I don't care. I have so many triggers set up in Trade Machine. I can't watch all of them tick by tick, but Trade Machine does tick by tick. Okay. So this is exactly how I use Trade Machine. This is exactly how I make homework today benefit me for the next year or 2 years or 3 years or 10 years. Okay. So for those who are curious, and I do encourage curiosity, there's more to the buy the dip trigger than what I just showed in that short vignette. So that's what the Discover tab is. You click on Discover, you go under FAQ, and there's a video on buy the dip. And it's not that little vignette I showed you. It really talks about the results year by year, how the constituents did, and you can really dig in deep. And so it's still only like a 13-minute video, but I recommend everyone do research before you apply a trigger. I mean, why wouldn't you? So again, that's what that is. Okay, so that was our first trigger. That was 9 trades. I would trade those 9 things. I have traded 2 of them already. Traded 1 of them yesterday and sold it today. And you can go to my Twitter account if you don't believe me. I posted it in real time. Okay. But I promised you 4 strategies and about 30 trades or about 25 trades. So now it's time to go with strategy number 2. Strategy number 2 is exactly what Danielle was talking about with pre-earnings momentum. Okay. After we do that, I'm going to come back and show you, I'm going to add probably 10 of different varieties, different times before earnings. Then we're going to go and see the newest technicals that we added, which are technical bursts for bullish and bearish momentum. Okay. This next phenomenon we're going to look at, this pre-earnings momentum, is one of the most powerful signals I've ever seen in my life as a trader and as a researcher in both institutional finance and retail finance. Okay. I'm talking about as a hedge fund manager, as head of algorithmic trading, as managing director of quantitative research at GMI, which was later acquired by MSCI for $15 million. This pattern, this tendency is absolutely incredible. And it has persisted through both bear markets, okay, for more than 14 years. Now, having said words like powerful and incredible, it doesn't mean it wins all the time, right? That's just a complete fantasy. Nothing wins all the time. Okay? But we're going to examine the outcome of getting long calls 3 days before earnings, 7 days, 14 days, and selling the call right before the event. Right? But there's one added step to it. There has to be something in the technicals that tell us you don't just buy ahead of earnings. There has to be, even if it's just one little indicator, we need one little indicator that tells us when we should not do it, why we would not want to buy the run into earnings as markets were collapsing in Q4 of last year. That would have been disastrous. But if you use this version of pre-earnings momentum trading, it would have been the greatest trades ever. And you know why? Because you would have gotten no alerts. Would have just been absolute silence on this trade because it didn't qualify based on a very simple but critical technical requirement. Okay, so we're going to watch another vignette. This one's the longest one. It's like 7.5 minutes. And the real detail behind it, when you become a Trade Machine member, is right here. It's become a top 1% expert. It's a 30-minute presentation on why volatility matters, what happens to theta decay, why there is a run into earnings. And there's also a little bit of a secret about the run into earnings that goes even beyond the technical, okay, which we don't share outside of the walls of Trade Machine. We don't even share it outside of the walls of Trade Machine on webinars, okay? But there's actually something else to it as well. So for now, I would kindly request that the Simpler Trading Technology team play the pre-earnings momentum vignette, and I'm gonna stop sharing my screen and go mute for a second. Answers. That's what this is about. And look who else follows our research. Article after article after article. Goldman Sachs, BlackRock, Bank of America Merrill Lynch, the largest institutions in the world follow our research, but they don't have access to it. Only Trade Machine members do. We're going to look at one of the most remarkable phenomenon we have ever seen in retail or institutional finance, which has persisted over the last 15 years, 2 bear markets and a bull market. But if this phenomenon exists, we need to prove it. There must be verifiable entry and exit rules. There must be a technical indicator safety valve that learns to avoid the trade when the market changes direction, and the results must be empirical and explicit. And that's it. By now, the rest of the world has picked up on our published research that there has been, in the last 10 years during the bull market, pre-earnings optimism, in particular in technology companies. We're talking about this period right before earnings. We're not talking about what happens after earnings, but there has tended to be pre-earnings optimism a week or 14 days before earnings, where owning calls and then selling them before the earnings event has been a fantastically good trade. Let's just take a look at how good it has been. We'll look over the last 10 years. We'll look at Microsoft, Google, and Amazon. We'll look at buying a call. We will do it with custom earnings timing. That is, we will open the position 7 days before earnings, and we'll close it the day of earnings. Since all 3 of these companies report after the market closes, this trade does not take an earnings bet. If these stocks reported before the market closed, then we would have to put a 1 here. And here are these fantastic results. We can see across the board from Microsoft, Google, and Amazon, just staggering results. 340% to 497%. The win rates are all above 60%. But there's a fair criticism which says, sure, if we could guarantee that we would be in a bull market tomorrow, then we could put this trade on today. But we cannot guarantee if we're in a bull or bear market. And the end of 2018 has been a perfect example of how quickly things can turn. So let's take this exact same test and let's just look at what happened over the last 6 months. And what do you know? All 3 of these have now turned into losers. Google and Amazon in particular have been monstrous losers on just 2 trades. So does that mean this pre-earnings optimism that we talked about before, does that optimism no longer occur? Or if it does, how do we know when it's going to occur? We're going to apply a technical trigger. We will go down to a technical open rather than normal time. And all we're going to do is enter this trade 7 days before earnings if
and only if the stock price is above the 50-day moving average. That's it. We're going to do the same trade, but only if the stock price is above the 50-day moving average. For those of us that are more visually inclined, this is exactly what we're doing. We're waiting for the 7 days before earnings. That's this green E icon. We're checking to see if the stock price is above the black line. The black line is the 50-day moving average. Since it is, that triggers an entry, and that is the momentum we seek. We fast forward one earnings session, and again, we look at 7 days before earnings, but now the stock price is below the 50-day moving average. It's below that black line, and so no trade is taken. That is our safety valve. And here are the results now. Even over the last 6 months, you'll notice that one of the earnings was skipped. You'll see each of these stocks only have one trade, even though there have been 2 earnings in the last 6 months. And which trade was skipped? We can just click on a backtest tile. We can see the only trade placed, for example, in Microsoft, was in summer. Same thing with Amazon, the one that was in summer. And you'll find the same thing with Google. We applied a simple rule, and now we can compare these last 6 months using the technical indicator without the technical indicator. And here they are side by side. Look at the difference that just eliminating one trade has had. But now, let's look at the impact of this little filter over the last 10 years. That is, what if we used this technical open, that is, trade the 1 week before earnings, if and only if the stock is above the 50-day moving average, but let's do it for the last 10 years. And here are those results. And since we're dealing with a lot of numbers here we include the results without the technical trigger. To make things easier to read, we'll just show the total return of the back tests and the win rates. First, we found the pattern, and then we found the safety valve. Using the simplest of technical opens, we have seen higher returns using just one of the phenomena that we have identified that exist in the market during both a bull and bear market. Of course, there's no reason to only look at 1 week before earnings. We can also try looking at short-term momentum trades, that is just 3 days before earnings, and looking for that pre-earnings momentum. And in this case, we'll look at Tesla and Nvidia. And here are the results over the last year for those two stocks. You see both of them have 4 wins and no losses, totaling over 500% or 200% on just 4 trades each. It turns out that we can also look at the 14 days before earnings for this pre-earnings momentum. So we have 3 days, 7 days, and even 14 days. And how do we find all these ideas? How do we know which stocks are working the best? That goes to the Pro Scanner. We'll click on Pro Scan. We'll select by strategy. We will choose a ticker group of the NASDAQ 100. And you can see there are so many scans that we have for idea generation. But in this case, we're focused on the pre-earnings scans, and we're looking at pre-earnings optimism. So we have the 7 days, 14 days, and 3 days pre-earnings optimism calls. We can even tap on the 3 days and look at those results. You can sort by the number of wins, by the win rate, by the average trade return. You can even sort by the length of the back test. But if we scroll down, we can see even more. Not only do we have the 3-day, 7-day, and 14-day pre-earnings long call, we also have the 3-day, 7-day, and 14-day pre-earnings long call with the technical requirement imposed on it. That is, those trades are back tested and scanned if and only if the stock price is above the 50-day moving average. So you can see, even for this single type of trade, we have 6 different scans to find the best of breed. While we're here, you notice that we also have pre-earnings volatility plays. That is 4 days, 14 days, and 7 days before earnings, looking to own a straddle just to capture that rise in volatility and then closing it the day before. You can always just tap on a ticker in the scanner and it will bring up the backtest tile and show you those results in the backtest tab where you can customize it further. And finally, no backtest is complete without setting the alert. So I go to the alerts tab. I'll add 2 tickers. I want to look at Nvidia and Workday. It turns out Workday is a great stock with this pattern, 3 days before earnings. For the alert type, I'm not going to go days before earnings, but rather I'm going to go days before earnings with technicals. I want the alert to be 3 days before earnings. And the technicals that I want to set, I'm going to click this button, are that the stock price is above the 50-day moving average. Then I add my email address. And I actually like getting text alerts for these things too, so I'll enter my phone number, and then I'll add some notes. And then I'll add the alerts. So we have found the answers that we sought for momentum trading. We found a verifiable entry and exit rule. It was absolutely structured and methodical. We found the technical indicator safety valve that learned to avoid the trade if a bear market or a correction was starting. And finally, the results were empirical and explicit through a bull.
All right, I'm gonna share my screen again. Okay. And should be on a trade machine. Let me close my other windows. Cleared everyone? Okay, just got confirmation you guys can see it. All right. So great, that was a lot of talking and a lot of video, but I don't really like talking in video. I like trading. So here we go. Let's pretend we just logged into CML trade machine. We're all members. Great. I like this pre-earnings momentum thing. Danielle described it beautifully. Ophir did it well. There's much more research on it on the Discover tab. Okay, great. I want to know the ones I want to do. Okay, here we go. So far, we've added 9 trades, and I promised you 24. So we've got a ways to go. I'm going to go to the Pro Scan. I'm going to go by strategy. This is the last time I'm going to do it, but I'm going to do the Dow again. Okay, and there's a lot of choices. I'm going to start with the furthest out, 14 days before earnings with a technical requirement. Just start there. Okay. Oh, I have to choose a strategy. Yes, I did. Okay, there we go. There we go. Okay. Let's sort by the number of wins as always. Okay, Microsoft, Walmart, Disney. Okay, good enough for now. So I'm just going to click on Microsoft. We have a lot of traffic. Okay, here's Microsoft. I can go, if you don't remember, it just opens a new window. We're back in the scan tab. It was Disney and Walmart as well. All right, go back. Okay. Microsoft, Walmart, and Disney. Okay. This is the last 5 years. Just so you remember, you don't have to memorize any of these scans. Once you click on a result, you can always come back here and it'll show you. It's like, wait, what am I doing? Long a call. Cool. What else am I doing? Custom earnings. Right. What does that mean? Oh, opening 14 days before earnings, closing 1 day before earnings. Right. What was the technical requirement? Oh, right. The stock has to be above the 50-day moving average. What was the stop and the limit? Oh, okay, 40. What length of options am I using? Oh, okay, they're using 30-day options. Okay, so this looks great. Let's check the last year. They all look absolutely fantastic. So yeah, I've found my first 3 pre-earnings momentum with a technical requirement trades. So I'm just click add earnings, add alerts. This is a days before earnings with technicals alert type. These are all the alert types we have. All right. It's already filled in for you, but it's 14 days, always good to check. The technicals are pretty simple. Stock price above the 50-day moving average. I'm going to put my email address in again. And it's going to sound really loud to you, sorry. And then I'm going to put in my phone number, my movie phone number. For this one, I like to add a little note. It's a pre-earnings call. And I also remind myself that's 14 days before earnings. And I'm going to click add the alerts. 3 more alerts created. Okay, that's 12. I promised you guys 24 trades in real time. Well, here's 12 of them. Okay, but I'm not done. I want to go back to the scanner. There's no way I'm done with this strategy, right? Let's change it up a little bit and let's go to the NASDAQ 100. Let's do 7 days before earnings, long call. Okay, and we'll sort by wins. Cool. So we have SNPS, ASML, Microsoft as well, but we'll skip it because Microsoft looked better on the 14-day. CHKP, ALGN. Okay, so I'm not going to remember all of those, right? So I'm just going to click on one. Okay. SNPS loads. I can just double check I'm looking what I think I'm looking at. I click custom earnings. Right. 7 days, 1 day. Got it. Okay. Technical open. Got it. Above the 50-day moving average. Notice that we're now using weekly options. Okay. What were the other names on there? Take a look again. Oh yeah, right. Those are the names. So ASML, that's a chip maker. Great company. CHKP, ALGN. Okay, and maybe I want one more. Okay, let's do ADSK. Okay, so here they are. looks pretty good to me over the last 5 years. Let's look at the last year. Hey, ADSK doesn't cut it. It's break even. Won one, lost one. The win kind of smudged out the loss. I don't want it. So I'm going to add these 4. Okay, same as before. I click the add alert button. There are the 4 tickers. It's 7 days before earnings. Stock price has to be above the 50-day moving average. Same old email address. Again, as a member, it's automatically filled in for you. My phone number. I like to give myself a note again. It's the pre-earnings, but this is 7 days before. I'm going to add the alert. 4 more created. There's 16 of the 24 I promised you. Now, let's look at the really big names though, the Phoenix names. This wouldn't be complete without Danielle's analysis. And I want to show you something really interesting about these names. Okay, I'm going to look at Google, Facebook, and Amazon. But you're going to notice something a little bit weird about them. Like, why this isn't great and why is this losing? What's going on? Here's what's going on. For these names, the big tech names, remember that they report after the market closes. Okay, so if you want to do some custom earnings timing, you can go 7 days before earnings and you can go right up to the day, right? So you would close the position, say, if you're on the East Coast at 3:55 p.m. and you're not going to get hit with earnings. Earnings come after the bell, about half an hour after the bell, sometimes right after the bell. So we can go right up to it, okay? And let's use the 14-day options. Sorry about that. Stock price above the 50-day moving average. Cool. And here we go. Now all of a sudden, these are looking a lot better. Stops and limits at 40. And these are the trades we want. We want to go right up to that day. And that's because a lot of these stocks hit a flush the day of earnings. People rush in and we want to catch that. And we can look at the last year as well. And these are incredibly good, right? So I also want to add these, but they're a little bit different. So I click add alert. I'm going to, same thing, put my email address and my phone number. And now I'm going to give myself an alert. This is pre-earnings 7 days. And then I put here up to the day of earnings, right? This is right there. If I could spell, it would be great. And I'll add the alerts. And I've added 3 more. I've now added 19 alerts, okay? So again, all we've done is go from the scanner, which is still open, right? The scanner to the backtest tab to the alerts tab. And I'll just remind you as a Trade Machine member, when you come to Discover, you're gonna wanna look at this webinar. It's not really a webinar, it's a presentation. There's something that's going on even deeper with this pre-earnings momentum. And it has to do with what happened on the prior earnings release. We're talking a quarter ago. That has an impact on these returns. And there's a special way you can test it in Trade Machine. But I've made a promise to all Trade Machine members when I developed this research that I would never share it outside of the walls of Trade Machine. So I can't tell you. But there's even, and what I've just shown you is good enough. But you can go even further with this trade, okay? So I think I've added 19 trades, so I haven't fulfilled my promise yet, and I will fulfill my promise. Let me just make sure it is at 19. Yep. Okay. Oh, you know what? There's actually one more I just wanted to look at. It's one of my favorites, so I figured I'd just share it. You can also just test things on your own. You don't have to use the scanner. I love Twilio. I am long Twilio. I thought there should be pre-earnings momentum in Twilio, but I didn't know. So I'm going to go ahead and set it for 3 days before, close 1 day before, look at the last 5 years. Oh, it hasn't existed for 5 years, 3 years. Look at that. Twilio, 8 wins, no losses. Never lost. It's only had 8 earnings as a company. Well, it's only had 8 earnings as a company where the stock price was above the 50-day moving average. And it's never lost. I can look at the last year. It's certainly never lost in the last year either. Right? So that's another one I'm going to add. This will be my 20th. Okay. Twilio, this is 3 days before earnings. So if you're following my logic, I started at 14 days before earnings, then I went to 7 days before earnings, and then I went to 3 days before earnings. Obviously, I'm nowhere near maxing out the trades that I'm going to want to be triggered on, but I'm not here to show you 150 trades. I'm here to show you what I promised, 24 trades. So, all right, and this is a pre-earnings, but this is 3 days for Twilio. So add the alert. All right, I fulfilled 24ths of what I promised you I would deliver. But the last 4 might be the most interesting, okay? The last 2 strategies we're gonna look at come together. It's only one vignette, and it's technical analysis. And it is, in my opinion, when I looked at technical analysis, I said to myself, there must be a time when we stop just drawing lines on a chart. We look at one chart, we draw some lines, we say it looks good. We just can't do that. I don't want to draw lines on a chart one time. I don't even want to draw lines on a chart 10 times. I want to draw all of the lines on all of the charts all of the time. Okay, this is when we get to the power of Trade Machine. We're talking about millions upon millions of data points, hundreds of thousands of back tests through 2 bear markets and a long bull market for both a bullish trigger and a bearish trigger, right? You don't always have to get long, right? In the Discover tab, you will learn about the requirements for these triggers. It's called the bearish technical scan and the bullish technical scan. I was going to show you a video, but you guys have seen enough videos, and when you sign up, you're smart enough to know how to click on a link and watch a video. So I'm going to skip that part, and I'm just going to start adding the trades. Right? And it's going to be the exact same process I went through every other time. I'm just going to go back as though I just logged in. Okay, I've just logged into Trade Machine. Brand new. I remember that guy Ophir was talking about bullish and bearish bursts. I want to do that. Pro scan. All right, let's go to the NASDAQ 100. There's the bullish technical bursts and the bearish technical bursts. I'm going to click on bullish technical bursts. All right, and now I'm only going to want to look at the results over the last 3 years or more. When it comes to technicals, I don't just want to see it work like once. I want to see it work like, 20 times or 10 times. Okay, I'm going to sort by win rate. Okay, and only 3 results, great. And so we're going to have CTRP. Oh, sorry, just sorted again. All right, we got SWKS, NVIDIA, Lamb Research. So I'm not going to remember all those. So I'm just going to click it. No way I'm going to remember all those names. Just let it load. Man, you guys are hammering away on Trade Machine. There's a lot of people on Trade Machine right now. We have a server farm in Amazon, which auto scales, and you guys are still crushing it. It's okay. We'll scale up. Okay. Here it is. I like NVIDIA, Microsoft. I like Lamb Research. And you know what? I love the retailer Ulta. I don't know if you guys know about that company. So I'm going to take a look at it. All right. These are the results over, I don't even know. So if you click the settings right here, you can see how long the back test is. Okay, that's 3 years. Let's do 5 years. All right. Now, again, we don't even know what technicals we're looking at yet, so we're not going to do it blindly. But here are the results. They worked over the last 5 years. Critically now, did they work during that kind of bear market time? Okay, it never happened in SWKS over the last year. That's what that message said. So we don't want it. We're out. It hasn't triggered in the last year. Not worth it for me. If it didn't work over the last year, I'm out. Let's look at the last 4. Okay, all of them worked. In fact, there was only 1 loss, and they all worked huge. What are these technical settings? What is this voodoo that's happening? You can always just click. Of course, you can watch the video and watch all the research, but you can also just click on the settings. Click on Technical Open. These are the settings. It's the day the stock crosses above the 10-day moving average, that moment, that day. Okay, the stock price is already above the 200-day moving average. Okay, But the 50-day moving average is above the stock price, which is a fancy way of saying the stock price is below the 50-day moving average, right? So we're not looking to pick up screaming momentum and buy it when the stock is overbought. We're certainly looking for confirmed momentum, but we want room. And we'll also make sure that the RSI is below 70 just to make sure we don't blow ourselves up, okay? And these trades look great. I'm gonna add them. It's NVIDIA, Microsoft, Lam Research, and Ulta. These are technicals. Again, the way you set the alert, if you want to do it manually, you just click the Set Technicals button. These are done automatically if you do it from the Backtest tab. I'm gonna go ahead and put my email address in there. Okay. And the note to myself that I always put very simply, bullish Momo. I'm gonna add the alerts. That's 4, which means I've created 24 alerts in real time. Obviously, you can do the same thing on the scanner with the bearish technical bursts. Now, those are the last 4 strategies I'm going to talk about, and the last alerts I'm going to talk about officially. Now, I'm just very briefly going to show you other things that are here. I know that Henry's been doing some amazing things with ratio spreads. We have a ratio spread scan, and we found basically what he's finding. We also have trades after earnings, right? What about this? I get asked about this so many times. What happens when a stock just rips off of earnings? We didn't make the bet. We just were like, whoa. When does it keep rallying? I remember this because about a year ago, I was watching John, and I don't know if you guys have been around long enough with simple trading. This is when NVIDIA was just ripping, right? And NVIDIA crushed earnings. It was at 230, and it just kept going for the next 5 days. It kept going, and John knew it. He was actually trading in his account after hours. And I was like, man, John is crushing it right now, and it kept going. So I decided to create a trigger for that. And so we actually have a scan which tells you which stocks, when they crush earnings, will then continue to rally or have continued to rally after that. So we have all kinds of, that one, by the way, is called, it's post earnings, and it is the 1 day after earnings jump long call. So there are all kinds of strategies for all kinds of traders. And all you do to use Trade Machine is you log in and you end up on this tile and you say, you know what I want to look at today? I want to look at, you fill in the blank, whatever strategy you want to look at. And any strategy we have in there that is any kind of complexity, yeah, we're going to have a long video telling you how it worked and what our results were. For these technicals, we talk about not only the last 10 years, we dive deep into the Great Recession. We show you a technical indicator that's bullish, that worked during the Great Recession. NVIDIA was down 71% during the Great Recession, 71%. The bullish trigger in NVIDIA was up 40% while the stock was collapsing. And we do the same thing with the bearish technical trigger, right? It's been mostly a bull market. Does that mean you can't trade bearish momentum? No, of course you can. Of course you can. All right, so that's it for my formal presentation. It's incumbent upon me to do this last thing, and then I'm gonna answer some questions. So don't worry, I'm gonna answer questions, but I gotta do one last thing. Trade Machine is normally $199 a month. For simpler trading members, for the next 4 days, it's $99 a month. It'll never go up. And the URL is here. They have their own link, and it all goes to the same place. We're all redirecting to the same place. So if you've seen a different link, it's the same one. It's cmlviz.com/simpler. I'm going to now unshare my screen so that I can read the questions. I can't do both at the same time. Okay, so this is the URL, cmlviz.com/simpler. There's a trade for everyone, whether it's the technical bullish and bearish burst, buy the dip, pre-earnings momentum, post-earnings momentum, the ratio spreads, volatility, whatever you want. I'm also holding a members only webinar on June 27th, which is my birthday. So I work on my birthday. How do you like that? And in that webinar, I'm also going to show members how to go even further with the back tester. Okay. And by further, I mean I'm going to look at custom strategies like diagonals, right? Like ratio spreads, like a rolling call spread. You own a 30-day call and sell a weekly call against it. You sell it every week as it expires, and you try to get that stock to creep up while selling some of that premium. So that's coming for members. Okay, guys, I'm going to scroll up. It's only fair for me to scroll up. So let me scroll up. Start from the top. I am in the Gilead trade now that you called out CML members. Cool. Should we be seeing the video? Oh, that's what they, okay. So why 40 delta or 80 delta or 60 delta, whatever. So that's the beauty of Trade Machine. You can test any delta you want. Actually, let me just go ahead and do that. Okay, so let's just take any of these. These were the ones that, this was the bullish technical bursts. I'm just going to keep these 5 tickers. If you want to change the delta that you're looking at, you just click settings and you would change the middle delta. If you want to do it, and it will change, so I'll just show you, I'll do it a 70 delta and you're going to see 70 delta. So you can see which ones work the best, and it's up to you to test. But if you don't want to do one delta at a time, then you can go one stock at a time and take out the comma. So I just put NVIDIA, oops. Just put NVIDIA and then enter, and it's going to show me all of the deltas that I have set. So I have 60, 50, 40, 30, 20. You guys want to do 80. So it's 80, 60, 50, 40, 30. It doesn't really matter. This is also where you set your commissions. So Trade Machine can calculate your commissions for you. So feel free to trade and test any deltas you like. Okay, let me go back, stop sharing my screen so we get off of infinity and go back to answering questions. Okay. How do you know which are China sensitive? Well, the way you actually know is on the earnings calls, they tell you what percentage of their sales are from China, but there's actually an easier way, and it's called Google. And which NASDAQ companies, I'm typing over a microphone, companies have China exposure. There you go. So that's all you do. And there's a list. Here it is. Skyworks Solutions gets 84% of its revenue from China. You just keep going down. There's Qualcomm. You get names you're going to know and love. NVIDIA, Applied Materials, Micron. So that's how. You don't have to memorize it. The internet is our friend. Okay, can you put the NASDAQ 100 in the alert instead of a list of stocks? No, but you can put the QQQ in there. That'll just be for the Qs. So by the way, we cover every index and ETF as well. So if you do those, but you can't just say NASDAQ 100, we'll do all 100 stocks. You can, however, add as many stocks as you want to an alert. It's unlimited. I believe I think we've crossed 1 million alerts now. Exactly where I get stuck is right here, which time frame to back test, which trade type and why, and which delta. Okay, good. So hopefully this question was is at 5:39, and this is 6:19. I'm looking at Pacific time, sorry. So this is where I get stuck right here. Which time frame to back test? So in my opinion, at least 3 years, perhaps 5 years, or 10 years. And then for me, it's gotta work in the last year. If it doesn't also work in the last year, it's a no. It's a no. I don't even care if it's one trade, it's a no, okay? Which trade type? That depends on your personality, right? If you like really aggressive, like buying calls, buying puts type of trading, then you're gonna do some of the things that I went over tonight. If you're more into sort of higher win rates, a little bit less risk, it's well-defined, options is generally well-defined risk, but you're looking for higher win rates, then you're gonna look at things that we have in there like, well, I'll just show you. Just do it again. Keep going back and forth. Hold on. So this is for the crowd that likes, or not, it's actually everyone. If you don't just want to be buying calls and puts, you want to be doing other things. You can go to the scanner, go by strategy. And so we have after earnings, there's this really interesting phenomenon after earnings, that whether companies just implode off of earnings or explode after earnings, if you wait 2 full trading days, so 2 full trading days, that means if they report on Thursday, then you're waiting Friday and you're waiting Monday, right? So 2 full trading days. Selling a put spread has an extremely high win rate and tends to work over the next month, right? Similarly with an iron condor, if you like to sell options, 21 days, these are just scans, right? That's the 1 month. We have the 1 month short put spread. We also put a little safety valve on it. So if you want the 1 month short put spread with a technical safety valve, you know what, why talk about it? I'll just show it. Okay. All right, let's look at Microsoft. Microsoft is such a great trading vehicle. So This is how Microsoft has looked over the last 3 years. Selling a put spread. Okay, well, what am I doing? Go to custom earnings. Okay, I'm opening the trade 2 days after earnings. I'm closing the trade 29 days after earnings. I'm only doing it if the stock was up some amount after earnings. Doesn't have to be a lot. I just want the day after earnings, I want it to not be down. Okay. And for the technical safety valve, I'm saying the stock price has to be above the 50-day moving average and the RSI is below 70 using 30-day options. Well, here you go. Right, this is selling the 30-10 delta put spread. And of course, you can sell anything. So you can do the, I'll bet you this is going to be a little better, be a little more aggressive. Right, there you go. So here's a trade which has a 100% win rate, and you're winning about 17%. That's including margin. We include margin in our calculations. So there are trades for everyone. It depends what your personality is with trading. If you haven't defined your personality yet, then you probably do a little bit of each, right? You would add I'll just add this alert. This is already in my other alerts. Someone asked if we just have our developers have the phone number and email address in there, and we can, and we have. We can do that for email. We can't do that for phone because of spam rules, believe it or not. So we use Twilio, and you can't automatically add phone number. So your phone number you have to put in, but as a member, you don't have to keep typing in your email address. You'll see this alert has an interesting note. I'm going to add it, and I'm going to search for it. I know it's Microsoft. There's no one I'm going to find in my list. So it says, I don't know if you guys can read this. It says, make sure the last earnings was up by at least 0.1%, which is how you set the back test, but it's not captured by this alert, right? So you're going to get an alert that says, hey, it's 2 days after earnings, and Microsoft is above a 50-day moving average, and Microsoft and the RSI is below 70, but we don't know how much the move was after earnings. So you got to check, hey, was it up after earnings? And if it was, boom, you've got yourself a trigger. So that's the best way I would answer about when you say, how do I know which trade I want to do? What feels the most comfortable to you? Do you like selling options and watching yourself kind of accumulate income through high probability trades? Or do you like going a little bit more aggressive and buying calls and buying puts? I'll get out of the infinity screen again. Okay. Ophir. Okay, I just answered that. Can this be used for day trades? So I want to be very clear about this. Since we like to be structured with trade, sorry, let me take that back. Since we are structured in Trade Machine, we use end of day pricing. It's actually when the markets are the most liquid. So it's like 5 minutes before the close or 15 minutes before the close. You can't test day trading with this. So if you like to trade 1 minute bars, 2 minute bars, 4 minute bars, sorry, not 1 minute. Well, sure, certainly 1 minute, but 1 hour bars, 2 hour bars, 4 hour bars, that's not for you. Okay. This is going to find you other trades and other alerts and work for you in other ways. For the intraday stuff, our alerts are intraday in real time, right? But the backtest data uses end of day data when options are the most liquid, and we do not purposefully, we do not use intraday data. Does that mean that you should not trade intraday? No, I always, well, always is a big word. I generally put my stops and limits intraday. In fact, here's my Twitter account. Oh, I'm not sharing my screen anymore. I won't do it. I was going to share my Twitter account. I got out of the Gilead trade middle of the day. I didn't want to wait till the end of the day. I wanted to go do something else. I wanted to get in on an AMD trade. And I've too many long positions. So what I'm doing now, usually I just keep adding, but when I feel like I'm too long, I'll take a winner and take that and put it in another trade. I won't pile it on. That's just very personal, has nothing to do with Trade Machine. Is there an alert to get out of a trade? So the only way you're going to get an alert to get out of a trade is if that alert has to do with days after earnings. So if you're supposed to get out of a trade or before earnings, if you're supposed to get out of a trade a day before earnings, then you literally set an alert 1 day before earnings and write yourself a note. Hey, Ophir, you wanted to exit your Microsoft trade 1 day before earnings or whatever. But we don't have technical exits as alerts yet. Okay. When do I close the buy the dip trades? A great question. I'm just going to share my screen again to show you that everything is found in the scanner. Right. It's a really good question. Like, when do I close this buy the dip? So, sorry, the share screen button takes a little bit of time to load. So it's just, for me, it's just spinning in a circle. So I'm still with you. And if it doesn't show up, I'll just, use my words. So there's a 50% stop and limit on it. Oh, here we go. Share the screen. Okay. So it's a great question. This goes for any scan. How do I know when to get out? Okay, well, let's go to the scan. In this case, it doesn't even matter which tickers we use. In this case, it was buy the dip. Okay. Yeah, whatever. Let's go with Cisco. And you're like, okay, this is good. I have an alert, but when do I get out? Okay, the alert loads, sorry, the scan loads all of the requirements. First of all, the stop and the limit, 50% stop, 50% limit. The other one is you're using 30-day options. So you're gonna exit when you expire, if it expires and you don't hit that. You don't have to memorize this because you can do it in the scanner. But again, really, you want the Discover tab, right? In the Discover tab, we talk about this in great detail. How you get in, when you get out, what are the exit requirements? Why did we choose those exit requirements? So the answers are always on the Discover tab or simply by running a scan. Okay. Sorry, infinity screen again.
Hey, sorry, do you mind if I say something real quick, Ophir? I just was seeing
No,
a
go
bunch
for
of
it.
questions in here. Oh, thank you.
Yeah, go for it.
So yeah, we do have a ton of people who already have Phoenix, and then we also have multiple subscribers in here who have signed up for CML before. Very happy people have had it for a little while. So I did also talk to the team. Sorry, I did also talk to the team, and if you already have CML and you just want a refresher for the live trade, then yes, I'm more than happy to have you join me in that live trading. You won't be sent the link automatically because you're not going to be a new subscriber. So if you're listening to me right now, you're going to have to email support@simpler.trading for the live trading link. And same thing if you have already purchased Phoenix. But that is completely fine with me for those of you who already have the tool and want to join in on another live trading session. Sound good?
Sounds good to me.
Okay, I'm gonna turn off my mic.
Okay. It says, at what part of the day do you enter the trade? So every trade in Trade Machine, right? Every backtest has a very clear rule, and you'll find it on any insight. I'm actually going to read it for you. The mechanics of the Trade Machine are that it uses end-of-day prices for every backtest, entry, and exit, and every trigger. Okay, end of day. Doesn't mean you have to trade end of day. I sometimes or usually don't. But if you want to replicate exactly what the backtester is doing, it's end of day. So I have members who do both. The members who do the end of day and are patient tend to do better than me. I see their trades, they share them on Twitter. I'm like, oh man. So discipline does tend to help. But anyway, end of day. Okay, answered that. What about the bearish trades? So with the bearish trades, you would just go into the scanner and you'd look, it's called bearish bursts, and you would just start going down that list. Okay. Okay, is that 50-day simple moving average? Yes. So which moving averages do we use? You don't have to remember it. It's on Trade Machine when you open it up, but I'll just say it out loud. 10-day and 21-day are the exponential moving averages. 50-day and 200-day are the simple moving averages. You don't have to remember that because when you open up Trade Machine and click technicals, it tells you. Ophir, I've had CML for a few months, sort of intimidated to use it. I love this webinar and I'm looking forward to it. Great. Excellent. Do you do a strangle? Yes, we have. So do you do a strangle by putting a call? We have strangles, both buying and selling strangle scans. And of course you can test any strategy you want. And a strangle is one of our pre-can scans. We actually have an incredibly powerful scan, which is when the market is about to fall apart. So it's our volatility scan. And it tells you exactly when to buy that tells you when historically it has been ideal to buy a strangle. So buy a call and a put, usually the 40 delta of each, because the market's about to have a spasm one way or the other. We actually have a scan dedicated to that. It's called the technical strangle scan. So again, I cannot cover, well, I could, but I don't think you guys want me to cover every single strategy. But if you can think it, we can do it with one caveat, up to 4 legs with options and 1 leg of stock. So up to 5 legs, 1 leg being stock, 4 legs being options. That's the max. We can't do 5 legs right now. We can't do 5 legs of options, or we can't do 6 legs, meaning we can't have like 2 different stocks and options. Is there special magic to why I use a stop and limit of 40%? Man, that special magic is called back testing hundreds of thousands of times. So everything we do is I just stopped having my opinion when Trade Machine came around. I stopped having an opinion. I just started following it. I've never understood why you select 30 days or 14 days or 7 days to expiration. What is the criteria? Again, I just back tested it. And you can feel free to back test it. It's in the upper right-hand corner. You change the days of expiration. You can change it to anything. You can change it to 16 days to expiration, whatever you want. Are the days trading days or every day? Okay, this is a great question. And this is one thing that we are really bad at communicating. I'm going to say it and then you can ask support again. Okay, it's a good question. Are the days trading days or are they calendar days? So just to make it clear the difference, 7 calendar days before Monday is Monday. 7 trading days before Monday is the Thursday before then, right? Because we have to skip Saturday and Sunday, right? So that's the difference. In Trade Machine, when we do days before earnings, when we do 6 days or more, we use calendar days. So if you're doing the 7 days pre-earnings run and earnings are on Thursday, we're talking about the Thursday before. Just makes it way easier, right? Once you start collapsing that window to 5 days or less, we start using trading days. So we have a 3-day scan. Let's say earnings are on Monday and it's 3 days before earnings. You want to do the scan 3 days. So you want to open the trade 3 days before earnings on Monday. We don't count Saturday and Sunday. So day 1 would be Friday. Day 2 would be Thursday. The trade would open on Wednesday. Okay. So 5 days or less is trading days. 6 days or more is calendar days. All right. Okay, so someone asks, are the time frames fixed to daily? Yeah, it is. So there, we don't have minute or hour ticks. Not yet. I mean, we will, but not yet. Ophir, how do you scan for trades to take today, not sometime in the future? So it depends on what trade, but if I'm looking for a trade kind of to go right about now, and let's say I want to do a pre-earnings trade, I'd go into the scanner. I would sort the scan results by next earnings date. And today is the 18th, so I'd look for things around the 18th or 19th, right? Or whenever the date is. And for the other things, so let's say I'm looking for a buy the dip trigger that's ish now. So I would look for companies that are below the 200-day moving average, but are above the 10-day moving average. So those are close, right? So if the days are trading days, would 14 days be 2 weeks and 4 days? Okay, so I answered that. So 14 days would be exactly 2 weeks. So if earnings are on Thursday, 2 weeks, 14 days before that, and Trade Machine would be 2 Thursdays before, because that's more than 6 days. 6 days or more away. Ophir, I just signed up on Saturday. Can I get a better price? Yes, email support. Ophir, since you have your email and phone stored in our account profile, is there any way to automatically fill in the email and phone? So we do automatically fill in the email. We can't fill in the phone number. What is the best way to incorporate the CML research website with the Trade Machine? So if you're using CML Viz, the free site, that's how you can get. So there are not a lot of places that give you moving averages in real time. In fact, when the Gilead thing triggered 2 days ago, a bunch of people said, no, Yahoo Finance is the 200-day moving average is here and it's above the 200-day moving. And I just felt so bad for people that they were using Yahoo Finance to trade. Stop using Yahoo Finance to trade. I don't care what you use, don't use that. If you want to trade, use sites that are dedicated to traders, not sites that are dedicated to selling you ads. Yahoo exists for one reason and one reason only, to sell you ads. That's it. They don't care. It's a random number generator. We have a real-time pivot point chart on cmlviz.com. It's free, called Pivot Points. But you don't have to use ours. That's the one we use in Trade Machine, so I'd recommend you use it if you're going to use Trade Machine. But there are other places that do real-time as well. But it ain't going to be Yahoo, guys. It just isn't. It's not going to be 99% of the sites you use, because why would they invest in real-time computation like that when they're just trying to sell you an ad for a Bitcoin, right? They're trying to sell you an ad for clothes, right? So don't use the bad sites. I just want you. My goal is that you're successful, and one way to be successful is to stop using sites that will make you unsuccessful. Can you send a recording to watch this again? Yeah, I'm absolutely sure they will do that. Can you buy the dip based on crossing above the 50-day moving average? Absolutely. So someone, Ralph asks, can you try a buy the dip a different way? That's our way. Do you have a different way? Absolutely. You just change the technicals. Here, I'll just do it again. I'm gonna show you a new buy the dip trigger. I don't know if it's gonna work well, but I'm gonna show you a new buy the dip trigger. And most importantly, I'm gonna show you how to test it, which is what we're here to do. We want to empower you. The scans aren't to keep you in prison. The scans are made to make you free, so you can try your own things. And I clicked share screen, but it takes a little while, so I'm still here. All right, if it doesn't pop up, so what you would do is where you enter your technicals on the back test tab, you just click technicals and you just say, okay, forget the stock crossing the 200-day moving average. How about the stock crosses the 50-day moving average? So you can back test anything you want. You can oh, here we go. You can create your own buy the dip trigger. Here we go. So here is, let's just go to buy the dip. Oh, here we are, buy the dip. Let's just do Starbucks. Okay. And so right now under technical open, it's going to have our buy the dip trigger. We say, no, I don't want that. I want it to cross through the 50-day moving average. Does that work better? So I'm just going to go to the drop-down menu, guys. I mean, we're here to empower you. So I put 50-day moving average, hit save. Not as good. It doesn't surprise me that it's not as good because the trigger we chose was back tested over hundreds of thousands of back tests. But that doesn't mean it's the same for every company, but you can put your own. So if you have your own ideas for bullish trigger, man, ignore us, try your own stuff. We welcome it. We want you to find the trades that make you money. That's how our company stays in business, you guys profiting. So if that means you want to create your own trades, please, by all means, or do both, create your own trades and look at our scans. Man, I wish there was a way to do this without the infinity screen. All right, sorry guys, I'm going to share the infinity screen because I have a feeling I'm going to have to go back and forth. Danielle will answer this, but it says, what is Phoenix and why is it synergistic with this awesome tool? I only found about this webinar during the Fibonacci Queen trial. Danielle can answer that. But also, if you want to rewatch this webinar, the first 20 minutes were Danielle going over Phoenix, and she did a really good job of explaining what it is, how you get kind of from the top, get it from like you have this huge pyramid of stocks and you come down to the bottom to the most critical ones. What about folks that have CML? Are they invited to the July 1st session? Oh, I think she already answered that. That's for Danielle. That's for Danielle. How would you utilize this in a retirement income account that primarily trades cash secured puts? I'm going to go out on a limb here and say I would not trade this in a retirement account. Sorry, doesn't mean I'm right. I just wouldn't do it. But okay, to answer, how would you? You can back test covered calls. That's a built-in strategy. You can back test covered calls and cash secured puts. So, oh, that's right, I'm sharing my screen. There's a reason we have the infinity screen on. So I'm going to go to the back test tab. Sorry, I'm going to type Apple. I'm just choosing. I'm not telling you to do this trade. I'm just picking Apple because everybody knows Apple. I want to never trade earnings. So I want to do this trade by never trade earnings. I want to do a covered call, and I want to get long a covered call. It's actually short a call long the stock, but whatever. And I'm rolling it every 30 days. Let's do it over the last 5 years. So this is buying stock, selling the 40 delta call. Here's how it's looked over the last 5 years. I would be cautious though, because if I go to 1 year, it's going to be a loser. This is one where I would definitely try a whole bunch of deltas, and they'd all probably be out of the money. So I'd go like at the money, out of the money, out of the money, out of the money, out of the money. And I'm going to take the comma out. Now it's going to show me all of the deltas at once. Okay, and let's add a technical on this. Let's say I only want to sell a covered call if the stock is below, how about the stock is above the 50-day moving average? I'm just guessing. Okay, so this is what I would do. You're actually seeing how I would use Trade Machine. If I wanted to do covered calls and I wanted to do them Apple, I would check all the deltas. I'd put a few technicals in there, and that's how you could use covered calls in a retirement account. Having said that, I wouldn't trade options in a retirement account. Sorry about the infinity screen, guys. Hey, Ophir, what time is the webinar on 6/27? I'm a CML member, thanks. The webinar on June 27th is, I believe, at 3 p.m. Pacific, but you're going to get an email for it again. How about adding checkboxes to the scan results to auto-populate the backtest screen? Oh, so you could do more than one. Yeah, I mean, it's a good idea. Okay, I noticed that sometimes a back test has returns that appear outside the parameters of a stop and limit. Yes, absolutely. This is really critical to understand. So let's go to buy the dip. It's really critical to understand the risk in the overnight risk in options. It's a very, very different risk than the overnight risk in stock. Okay, so let's do the Cisco buy the dip. Actually, which one went nuts? It was Apple, right? Let's do Apple. Right. Okay. 2 trades in Apple in the last year. 1 in the last 6 months? Okay, both in the last 6 months. Let's go even closer. Let's do it. I'm going to change. By the way, you can change the date to whatever you want right here, right? So I'm going to say, I don't know, since the 20th of 2019. I'm going to show you why you're going to violate. Oh, man. This trade has been kicking ass. Man. Okay, sorry. Let's go 420. Okay, this should be 1 trade. Okay, so we have a stop and a limit of 50%, but it says the trade went up 57.9%. How's that possible, right? And I wish I had another one because it Roku probably. It violates the rules even more, right? So you're like, oh, the backtester's broken. Like, it's not right, right? No, come on. All right, well, let's take the Apple one. So what's happening is that a stop and a limit, right, only get triggered when the market is open. The market gaps overnight. So a stock can be at 100 and open tomorrow at 104. Well, if you had the 50 delta call and you owned it, you'd be really happy. But if you had a 50% limit on there, no, that's going to be like a 90% winner. And the market isn't going to take it away from you. Even if you have a limit, it's not, your broker's not going to be like, you only got 50%. No, it's going to give you the first tradable price, right? So stops and limits are guidelines for your brokerage, for your trading, and they work intraday. But once the market closes, when the market opens the next day, there's a gap. And it turns out, for the most part, through our research, that stops are generally honored. They're pretty close, but you get much bigger gains than the limits. And so we tend to set equal gains, stops and limits, but when you see the losers, they tend to be pretty close to the losses that you set, but the gains tend to be above. But either way, you should know that when you trade options, you have this big overnight risk, right? You can have a 50% stop and lose 90%. There's nothing you can do. Stock gaps down $15 on the day. Yeah, the option market doesn't give you the 40%. It gives you the first tradable price. So that's why you see that. And it's a reminder that Trade Machine uses real prices. So it's not like a fake, it's not hypothetical. I just signed up for Trade Machine 2 days ago. Can I still lock in 99 forever? Yes. Ophir, is there a way to eliminate the low liquidity stocks in the Pro Scanner? You have to see them in the backtest tab and then eliminate them. We'll do that. We'll have a filter probably later. We can't see the list. I don't know what that is. Ophir, what's the cloud software names? It seems they sell off earnings and get snapped up. Does CML Scanner catch these and tell you when to enter? So the cloud names, which are probably Phoenix names that Danielle was talking about, they're from another product called CML Pro. If you hit me up on Twitter, I'll tell you some of my favorite cloud names. I can't tell you the ones in CML Pro because that's just a different product. But there are quite a few of them. And I tend to focus our insights on those in technology for lots of reasons. One is because they're really good to trade, and also they tend to be quite liquid. And as we trade options, as you know, we want liquidity, right? So it seems we only set alerts to the top winning ones, but trading happens in real times, not back in time, right? So although the tool in hindsight can show us the best winning stocks given the strategy, how do we know this will continue in the future? We just hope that it happened in the past will continue to happen in the future. It's a great question. Dimitri asks, he says, you're back testing. So that's true. And believe me, if I could tell you the future, I would do that, but I wouldn't sell a subscription to it. So we only have the past. Everything in life is the past. When you drive to the grocery store, you're using a back test. And what is that back test? It's the roads that you take. You know that if you turn on this street, then you're probably going to have less traffic than if you turn on this other street. It's not a guarantee that road could be closed. There could be kids playing football. Everything in life is a back test. We only have the past, right? How does the Fed know when to cut rates? They don't. They have history. So how about technical analysis? Everything about a chart is the past, right? Every line and dot on a stock chart is the past. That's all that we have. So can we guarantee the future? We cannot. And if we could guarantee the future, it would be more than $99 a month. It'd be closer to 99 million. Hi, yes, sure, one can test for anything, but okay. Okay. Hi, Ophir, you can test for anything, but with such a range of possibilities, is there any way to work backwards and solve for X, whereby one backs into the delta, trade type, and other deltas? Yeah, you can do that by setting a stock and then checking all the deltas at once and then kind of going backwards. Having said that, we get there faster because we've run, at this point, probably, I don't know, close to 1 billion different data points to find kind of what tends to work the best. And we go across vol regimes, right? Volatility moves in regimes. A bull market can last for a long time, but volatility moves in regimes, right? We were in this crazy low volatility regime for a while. Now we are not in a low volatility regime. And so delta is affected by volatility, and we've tested across all of them, all of those vol regimes. Can you comment on the thought of using CML to evaluate an iron fly or earnings to see if historically it moves over a certain range? Yeah, totally. If you are so compelled to do an earnings trade, you can backtest it. Okay, so I think NVIDIA moves like crazy on earnings. So I would say only trade earnings, and then whatever you want to do, buy a strangle, buy an iron ears, buy an iron condor. Oh, right, you guys can't see my screen? Oh, you can't see my screen. Okay, sorry. So I'm going to get long an iron condor only during earnings. And over the last 2 years, and actually I want to use the weeklies. So let's make a bet on volatility. Does it work in NVIDIA? No. Does that mean being short one works? Not necessarily. Okay, well, there you go. So if you want to, selling the vol in NVIDIA tends to be a win on earnings, but not in the last year. See, it's really hard. It's easy to find one that works recently, but doesn't work within the last year. But you can test whatever you want. If you want to trade earnings, guys, you can test it in Trade Machine. Just click only trade earnings. Or another way to do it is just to say open the position one day before earnings and close the position 1 day after earnings. That's going to be trading earnings, right? So feel free to trade it. Well, I should say feel free to test it. I shouldn't tell you feel free to trade it. Okay, Gilead triggered yesterday, but when I looked, TC 2000, the 200-day simple moving average had not crossed, so I didn't enter. Suspect this is a flaw in TC 2000, not your software, but have you seen this before? I have seen this before. Other softwares are wrong. We're right. Will you also send the link to the current CML subscribers through Simpler Trading? Will you also send the link to current CML subscribers through Simpler Trading? I think that's for Danielle. How do CML members sign up for next week's webinar? Oh, don't worry, we're gonna, as a new member, you have a few welcome emails and stuff. You're gonna get an email which says, here's the webinar, and you sign up for it. You're gonna get the reminder, I promise you. Can I please get the YouTube link again? Is there a way to input a stock and see which of the strategies works best for it? There is, actually. So this is, not a lot of people try this. I'm gonna look over to Alicia to see if is my screen clear? It is. So guys, this is something you can do in the Pro Scanner, which I didn't talk about. The people who left earlier are going to miss out. If you have a group of tickers or a ticker and you just want to know what the best strategy is, that is, you don't want to go strategy and look for ticker. You want to look ticker and look for strategy. You can just enter it. So instead of going by strategy, you go by ticker. Let's do Amazon, for example. And by the way, you can put as many as you want. You put a comma and you can put as many as you want. Okay. So I'll just do 2 because 1 is boring. Okay. It just ran every scan on those stocks, 43 scans. Now you can sort by wins, or actually Danielle has a really good way of doing it. She sorts by the average trade return. So what works best? All of the strategies we scan for these 2 stocks, what works best? It's the bullish the bullish burst for NVIDIA, right? For Amazon, it's the long strangle. It's that volatility trigger I told you guys about. That's an awesome trigger, an awesome scan. It just printed money in Q4 of last year when the market was melting down. Everybody was losing money, and we were just buying these strangles, and it was absolute total absurdity. I'm talking Friday to Monday was like 90% returns, just because the weekend happened. People were so afraid. So it doesn't actually surprise me. So this is how you do it. You enter the tickers. It's the Pro Scanner. Instead of by strategy, you go by ticker. Enter as many as you like. I think up to 100, maybe more, comma delimited. If you have Chrome, you'll see this thing happen. But if you don't have Chrome, don't worry about it. Just keep typing. It just won't grow. And you can go buy strategy. And then when you like one, you're like, whoa, 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 what is that? You keep talking about this thing, this strangle thing. What is that? Oh, you click on it. It loads. You're like, okay, dude, what is this? Click on the technical open, and here are the settings. Right? All of a sudden, that's this trade. I think if you do this trade over the last 5 years, it starts to get bonkers. Yeah. I don't even know if it's lost over the last 10 years. It's lost once in the last 10 years. Now, this trade only happens about once a year, right? So 12 trades in 10 years. But this is my favorite trade, this scan. I'll just show it to you. Technical long strangles. This is my favorite trade. I don't get a lot of them. There's probably 30 companies I like, and they each happen once or twice a year. So it's like 60 trades a year, which is not that often, right? But I love those trades. All right. Can you show weekly expiration trades or spreads 3 to 7 days to expiration? So the way you change days to expiration on the backtest tab, that is the options you're using, is just right here. You can 1 day, 2 day, doesn't matter. Now, if there's no such thing as a 1 day option, it's going to find the thing closest to a 1 day option, which is probably a 7 day option, right? We don't make up options in Trade Machine. This is all real data. But that's how you change the days to expiration. And you test different things. I'm living in Germany. Do you send SMS there too? No, unfortunately we don't, but we have a way around it. Google gives you a free phone number. I think it's voice.google.com or something. So just sign up for a free phone number through that, and we can send alerts there. So unfortunately, Twilio doesn't send internationally. A big thank you, Ophir, for a very satisfied CML, TMO, CML Pro member. You're welcome. Thank you. Are you talking about buying puts 2 days after earnings with those parameters? Oh, no, that was selling a put spread, but you can do that too. We also, by the way, I kind of tried not to do this, but there's this thing that happens when a stock rips off of earnings. There's also a thing that happens when a stock gaps down after earnings. We have that scan as well. So you can trade almost anything. Ophir, you've created a very impressive software. Thank you. You demonstrated the Phoenix and Tool are great trading, best of breed and strong segments following a pullback. That's Danielle. Given that stocks fall faster than they rise, is your tool and the inverse Phoenix tool as effective for trading worst of breed to the downside? Or do these stocks move too fast to get in the tops? Too hard to predict. Thanks. So I would say this. If you're looking to trade bearish signals, you can look at the bearish, well, let's just do it. ProScan, buy strategy, NASDAQ 100, bearish technical bursts. You're gonna find some names that are kind of ugly, right? So Celgene, they're gone now. I think they got taken over, pretty ugly. Alta and Facebook are not ugly. Win can be ugly. That depends, right? So you'll find some companies, chips, right? Marriott. So this is how you find those stocks. But you know, there's a technical trigger that's bearish for Amazon too. I mean, Amazon is incredible, but it goes down too. So why not make money on the way down? I mean, there's no rule against being bearish. Just remember, by the way, really good thing to remember. Some people think that since you can be bearish and bullish, that a good portfolio is like, you know, I don't know, 100 bullish triggers and 100 bearish triggers. In my opinion, that is not a good set. The market goes up 6 out of 7 years, right? We live in a facility that is mostly up. And when it goes down, it is scary and it is fast, but then it's over. So my alerts are probably 6 to 1 bullish to bearish. I definitely have bearish scans, but I keep in mind, hey, 6 out of 7 years, stocks go up. So I'm going to be about 6 to 1 bullish to bearish, right? I don't want to be 50-50 bullish to bearish. Although, by all means, if you prefer to trade bearish, you can do that. What do I know? Thank you for including this must-have for CML. Okay, very well. Okay, since alerts based on EOD, alerts arrive before market open the next day? No. Since alerts are based, since the triggers are end of day, you get alerts at the beginning of the day, right? So let's say today I got an alert for AMD at around an hour after the market opened. That it wasn't time to take the trade then, according to Trade Machine, right? It would have been wait to make sure the conditions are met at the end of the day, but we give you as much time as we can. So we tell you at the beginning of the day that the trade could trigger at the end of the day. When they have a lot of technical moving parts and it's close, I would wait. I usually don't wait, but when it's close, I wait. By close, I mean a stock crosses through the 10-day moving average. It's now at $10, but the 10-day moving average was $9.99. Okay, well, I'm not sure it's going to hold that, so I'm going to wait till the end of the day. When a stock crosses the 10-day moving average because it's just ripping like AMD did, I was like, I'm in. So alerts are in the middle of the day or early for the end of the day. So our alerts are not late, our alerts are early. It's a misconception. Always thank you, Ophir and Danielle. Great job, great service. Thank you. And I agree, Danielle did a fantastic job, always does. Does the $99 offer include pro research? No, that's just, no, that's, so CML Pro is something else. Okay, so here, what does Trade Machine get? You get the back tester, obviously. You get the scanner, which goes by ticker or by strategy, alerts, and the Discover tab. In the Discover tab, and as a member, you're going to get an email 3 times a week with I write these, with trades that I think are interesting. Sometimes they're not relevant, right? Like there's this really cool Wells Fargo volatility trigger. Here, I'll just click on it. And, you know, here's how it looks in, huh?
Not triggered.
Right. Oh, sorry. This Wells Fargo scan that I like, but it's not triggered. It's not triggered. I don't think it's anywhere near triggering, but I just liked it. And so I wrote about it and I added it to my alerts. And so it's going to happen. I don't know when it's going to happen, but it's going to happen. It happened 8 times in the last 3 years. It means it's going to happen 2 or 3 times a year on average. And sometimes they're really timely. I saw Gilead breaking through for buy the dip and I just wrote the article. But I wouldn't expect that usually. Usually I would expect insights to help you fill in your alerts or to help you look at the trade and say, oh, that's an interesting trade. I don't like Gilead though. Let me try these other stocks. Right? So that's what they're designed for. Yeah, we also have on the backtest tab, you can share. I'm just going to fill something. Oh, by the way, you can backtest stock if you guys want. You don't just have to do options. But I think we're all options. You can share your backtest results, like on social media. They won't be able to see your settings, but they'll be able to see this thing that you did. Right here, you click this. This gives you a specific link. And then you can see your top shares. Like you can see how well you've been. So for example, this is from my other account. How many decimal? This is 7-figure. Yeah. So 1.5 million people saw my bearish tilt on SPY. It's a ratio. It's that ratio. It's actually very similar to Henry's ratio spread. And we have a scan for it. And so 1.5 million people saw it. So you can share and then you can see your top shares. That scan, by the way, is right here. It's called the ETF technical ratio spread. Will you be doing futures? At some point we may, but I wouldn't sign up for a Trade Machine because you're expecting us to do it. Does that make sense? Everyone who's a Trade Machine member has gotten more than they paid for, right? So when we first started this company or this product, there was no ETF scan. There were no technicals at all. There was no such thing as technicals. You couldn't even test technicals. So everything that was a technical, so buy the dip didn't work, this didn't exist, this didn't exist, this didn't exist, Mammoth didn't exist, Squeeze didn't exist, ETF technical didn't work, and then we just keep building and building and building. There are people who originally started with us from simpler trading who are paying $49 a month. Eventually, this is going to go to $500 a month, but not for people who, right? Your price never goes up, but eventually this is going to be $6,000 a year. We just keep building to it, right? We're building to it, and so our members benefit from that. Okay, so the whole diatribe was about, we're going to add futures at some point, but I wouldn't sign up now if you only want futures. It's just, you're just going to be unhappy. You're going to wish we moved faster. Do you compete probabilities for each trade? Can you rank on probability? Yes. Not probability, on win rate. So you can rank on probability. I suppose I could code that in, but we don't do that right now. I can show you a cool way to compute probability if you guys want. It's a little mathy, but that is after all what I do. I too have been a Trade Machine subscriber since a webinar with JC months ago. Had no idea how powerful this tool is. Thank you. So that makes me very happy. It makes me happy that people were satisfied with the Trade Machine. They didn't even know what it had. Now you guys know, right? There just is no version of the world where you're trading options where you're not going to want to backtest something. That doesn't mean everyone in the world is going to want Trade Machine. Of course not. I wish. But if you're not using a machine to test your ideas, even if they're your ideas, they're not our scans, you're just not going to be fast enough. It's not because you're not smart enough. It's because we live in a world of computing power, right? Where we measure things in billions of computations per nanosecond, right? It just, nobody's that fast and that comprehensive. you know. Okay, I've been using Trade Machine, but don't see the new scans. Why? Oh, hey, so if you have been using Trade Machine and don't see the new scans or on an old version, email support. We need to upgrade you for free. We need to upgrade you. How long is an alert good for? An alert is good for as long as until you delete it. And you want to delete it, there's, well, it's pretty apparent, but you can just click delete, right? Is it showing on the screen? Okay, so you can delete alert right there. Do you have high short interest scan? I don't. What is the best time frame to buy the dip or the technical burst? What is the best time frame to buy in the dip or the technical burst? Oh, I would just say when they trigger. So, you know, I said a lot of my companies I have both for. Trying to think of one in particular. Microsoft probably, NVIDIA. Yeah, NVIDIA probably. Cisco. Those stocks I have both. So they're not going to trigger at the same time. They're just different. They're different alerts. It's going to be very hard for the technical bullish trigger to trigger when the buy the dip does, because buy the dip means it's been in technical failure basically. So you know, they generally don't come together. I've never seen them come together. It's like hypothetically it's possible. Do you ever use Fibonacci? I don't backtest Fibonacci, but the next thing we're adding to technicals is probably Fibonacci. Don't sign up for Trade Machine because you only want Fibonacci, but we're probably adding Fibonacci as the next thing to technicals. That technical window is pretty thin. It's just moving averages and RSI. We're probably going to add another couple of moving averages and then Fibonacci. Once it's email number, you get the future upgrades, or is there a version? No, there's no. So, okay, great question. There is no price inflation once you're a member. As long as you're a member and stay a member, you're going to see people. I'm telling you, there are people right now who are paying $199 a month, while there are other people who paid $49 a month. Well, that's what happens. I mean, early bird catches the worm. Good lesson for trading, right? I'm a trader, fintech software engineer from NYC. Love this tool, signing up now. If the backtest triggers at price of EOD, do alerts come at EOD? Okay, the alerts come the middle of the day. So I just want to reiterate, when you get an alert an hour after the market opens, that's not an alert that's a day late. That's an alert that's 5 hours early, right? Okay. When you set an alert, how long does it last? Forever until you delete it. Ophir, great session, great software. Thank you for your continual enhancements. Worth every penny every month. Thank you so much, Rob. You sounds like Chrome is the best browser for CML. Which browser do you recommend? I use Chrome. I use Chrome. On iOS, if you're using it mobile, we're mobile friendly. It's not a mobile app. We're mobile friendly. Safari's fine. Actually, sometimes Safari works better than Chrome on iPhone, but on Android, Chrome works better. Gotta love those browsers. Is there a filter for IV rank or IV percentile? That's another thing we're probably adding, but right now, no. But we obviously have the IV percentile. It's really been my fault that we haven't added it. I was a volatility trader when I was a market maker, and IV rank, what's a good way to say this? IV rank might not work the way you think it does. I'm sorry, the trading off of IV rank might not show you the results that you think it will. Sorry, I'm just gonna say that out loud. If you have a trade, the Fed scanner, yeah, totally. What is the wins and losses of that based on real trades? That is based on executions when the market is most liquid, so near the end of the day, based on the rules that you input for the backtest. It's real prices. What is CML Pro? What is subscription? Google it. It's not about CML Pro. I'm in Henry's class on Saturday. Can you touch on the ratio spread thing briefly? So I think Henry is based on, I listened to Henry's webinar. John introduced him. Everybody knows who Henry is. He introduced him for this class, and I was just in awe. And I feel like me touching on the ratio spread is not as good as Henry. Like, I would listen to Henry. If you want to know my version of a ratio spread, which I would not define as better than Henry's, you can find out by becoming a Trade Machine member. What you want to do is go to the Discover tab. Still loading. Sorry, I have someone else watching. That's good. Okay, so it's a QQQ trade. So I would scroll down. You see how there's tickers here? You can, if you guys want a shortcut on browsing, if you hit Control F, you can then search for something and QQQ. So April 4th, you read this article, and it will tell you about the trade. Of course, it wouldn't be CML if we didn't have a video on it. So here it is, SPY Tech, yes, how to create a custom strategy with SPY. So that's that. So you can watch a video on what my ratio spread is. But you can also use Henry's, whatever his is. I'm sure it's brilliant. You go to the backtest tab, you click custom, and this is how you create a custom strategy. Oh, sorry. Can you guys? Yeah. Okay. So I'm going to create a ratio for you. This is not a realistic ratio. I just want to show you how to do it. So I'm going to call this silly ratio example. I'm going to go short 50 delta call 30 days out twice. Actually, what do I want to do? No, actually, I'm going to do a real ratio. I'm going to go long 50 delta put 30 days out once. I'm going to go short 40 delta put 30 days out twice. I'm going to stay short. I'm going to do a 30 delta put once. And I'm going to cover it all up by going long a 20 delta put twice. So I'm long 3 options, right? That's this top line and bottom line. I'm long 3 options and I'm short 3 options. So this is covered. And now I'm not going to call this my silly ratio spread. I'm actually going to call this 50, 40, 30, 20 ratio. Okay, I'm going to have no stock here. I don't know why I tried it in NVIDIA, but well, I'm just trying NVIDIA. So it doesn't, oh, no, it's not only trade earnings, but we never trade earnings. Okay, so this one doesn't work in NVIDIA, nor would I expect it to. I would expect this to work more with ETFs. But you can create your own strategies, and then you, by the way, there's unlimited, there's unlimited strategies you can create. We have no limit on things in Trade Machine. We have members who have like 300 custom strategies. I don't think they use our scanner at all. They've just created their own custom strategies, which is awesome. That's awesome. So, so you can take Henry's ratio spread, build it in Trade Machine, and then use it on stocks you like. So please feel free to do that, or look at mine. Here's the link for Henry's ratio. Yeah. So Danielle sent out the link for Henry's ratio spread webinar in class. Okay, guys, I think I've successfully answered every question. I'm quickly going to say that and not look at the questions anymore. Is the page up? Okay, so that's it for now. CML members, Trade Machine members, we're going to have another webinar on June 27th. You don't have to remember that. You're going to email. And I'm going to go over custom strategies, diagonals, rolling call spreads where you're selling it weekly against it, things like that. And I'm also going to go over some of the research that I promised I could never go over outside of the walls of Trade Machine, which is something that, it deals with this. Like, what happens if a quarter ago a stock gapped up? What does that mean about the run into earnings 3 months later? And this is the price for simple trading. We're going to take that price down in, let's say, 4 days. I don't know. Thank you so much for your time, and your questions were so engaging. This is always my favorite audience. And I'm going to leave that page up. This is going to be hard for me. Hold on. And I'm going to turn my mic off. And I think, Danielle, unless you have anything else you wanted to say, or if you want to take the screen, I feel like I've done my part.
I'm all done. Thank you so much. I really appreciate the in-depth examples. I think that the follow-up webinar that you're having, and then as well, the live trade that I'm doing, hopefully that'll, be very, very inclusive. I think you did an awesome job explaining the new tools and how everything works, and looking forward to using it more together.
Awesome. All right. Thank you so much, Danielle. Thank you everyone for your time and attention and questions. It's not easy to stay on a webinar this long. And that's it for me. I'm going to mute myself and I'm going to go have a little dinner. All right. Bye, guys.
All right. Bye. Have a great night.